records of the different losses. So that makes it, they feel that they don't need auditors, but at the end of the day, we don't see growth. But it's very important on the other side, looking at the other sector that that could be the majority of the small and intermediary enterprises, and of course within the private sector, yes, of course majority really put up these principles into use, accounting principles, auditing principles, and definitely there is a high rate of progress. So today we are going to discuss auditing and why as a business you need an auditor, and how best can you acquire an auditor regardless of your financial standing, because the worrying thing about majority of the people is regarding the expenses to hire an auditor. With me on set is Mr. of course Enoch Mugoda, is the assistant auditor at PKF Consultant Uganda, and we are going to be discussing this topic this morning. Mr. Mugoda, nice to have you on set.
Thank you so much, Andrew.
Yes.
It's a great pleasure and honor to be hosted on this show.
Yes.
Once again, Enoch Mugoda is my name, Assistant Audit Manager with PKF Uganda. And I'm glad that we are going to discuss this crucial topic of auditing in Uganda.
In Uganda.
Yeah.
Okay. Very interesting. So I know definitely many people don't really have a clue.
Yes.
I'm not speaking for them that I know them, but I know.
Yes.
Right now, if we went at random downtown,
yes,
and we talked about auditing to the business people,
yes,
Chikubo, Owino, I mean, and so many kids.
Yes.
So you tell them about auditing, they'll tell you, I don't know what this is.
That's
right,
very true.
Let's talk about what is
auditing. And you realize that many people, as you said, have not appreciated, especially the informal sector.
Yeah.
Because one, they have not really understood what is this audit.
Exactly.
What is audit about?
Yeah.
Is it about fault finding? Is it about making people lose their jobs? Is it about winch hunting people?
Yes.
But that is not true. Auditing is a process of a systematic review of financial statements, of financial information.
Yes.
A systematic review. Because I'm coming to look at what the accountant has prepared.
Yes.
I'm coming to look at what the accountant has put before the management. Yes.
Okay.
So it is a systematic review of financial information. And you find that financial information is not independent from other business processes.
Definitely.
So you realize that the other business processes feed into the financial information.
Yeah.
The operations of the business, the operations of an institution feed into the financial information. Yeah.
Okay.
So people need to appreciate that as much as I have the financial information,
yes,
I need an external person who is coming with an objective approach, who is competent to be able to analyze the financial information to help you make an informed decision. And one will say, okay, why do I really need
an auditor?
An auditor.
Yeah.
And I want to tell you that in the growing world where we are seeing businesses growing under unclear circumstances, they'll need an expert point of direction.
Yes.
They'll need an auditor to help them guide on the tax planning, but also on the legal compliance, and also on the accuracy of their budget forecast.
Okay.
But you realize that all this is embedded in the work that the accountant who is on ground is going to do. So the auditor is coming to review and express an opinion and confirm to those, to the owners, the shareholders, and other stakeholders that the information we have presented to you in the financial statements are true and accurate and should be used to make decisions.
Yes. Maybe regarding that, what's so special about this auditor that, you know, like some people say, I know accounts.
Yes.
I can audit myself. Or somebody may say, let me get another professional accountant because auditing might seem so high.
Yes.
At least let them check through, review my books of accounts. So what is that special integrity that comes with an auditor?
Wonderful. You realize that, as you said, I can hire a professional accountant. Now, what is very interesting is, you can't be an auditor unless you're an accountant.
Okay.
So the qualification component of it distinguishes the two of you, though the training is the same. For me to become an auditor, for me to become an accountant, I must have pursued a course, Certified Public Accountants course, under the Institute of Certified Public Accountants of Uganda, that regulates the professional world of accountants. But we also have sister organizations that offer such, like SCCA. But you realize that in the domain of Uganda, for you to be recognized as a certified public accountant, even if you have done SCCA, you need to be enrolled to the Institute of Certified Public Accountants of Uganda because it's the governing body for locally. Yes. Now, when we get back to the question, what makes this auditor special? Yes. We are all accountants. You have the accountant in the company that prepares your financial statements at the end of the day. But the difference between the two, the accountant will give you the financial statements. Yes. The auditor is going to give you an audit report. In the audit report, there is an opinion confirming whether. So we have an opinion. Yes. Which distinguishes now into their final output. Yes. Whether the financial information that has been presented, either to the shareholders, either to an investor or a regulatory authority, is true and is free from any material error. But for him to arrive at that opinion, there are procedures that he follows. But the ultimate objective or the bottom line of it, he has to obtain appropriate and sufficient evidence to enable him make that opinion. Because there is a risk also of expressing a wrong opinion. Actually, I was about to come to that, that what really determines this opinion that makes it that it speaks a lot when you speak out to the people. So one has to appreciate that the fact that I come in once in a while, either on an annual basis or on an interim basis, I'm not going to look at everything. So that alone, there's an inherent risk that I might miss out something. But also, when you look at the guidelines that govern us in the execution, you have to make sure that as you design your procedures to approach this audit, they should be comprehensive enough to unfold all those areas. So we are saying, as much as we are basing on a sample basis, but we are competent enough to know what might go wrong. Yes, please.
Wow, very, very interesting. So now, in this regard, you talked. So this person is coming from outside. Now, according to this, and we know that we have two kinds of auditors. Internal auditors and external auditors. So, under what circumstances? Because I'm thinking, if you have an internal auditor, literally that can be one of your accountants. Maybe something which Ugandans have to know. Maybe what we need to really inform them. Distinguishing these two people, internal and external, because if this person gives an opinion and it's trusted, that means this opinion is void of corruption. I mean, biasness, because you want to do something out of your interest. So, to me, I feel like you shouldn't even have a certain close relation with the workmates to reduce familiarity. Let's talk about that.
Yes, Andrew. You realize that there is a very big difference between these two people, the internal auditor and the external auditor. Let's first dwell a little on an internal auditor. The internal auditor is part of your human resource in an institution.
So he has a relationship with you.
That means he has an employment contract with the institution. But two, he's part of those people that is actually interacting with on a daily basis. What makes them different a little is that they will not report to the manager. They will report either to an audit committee if the organization has. They will report either to a CEO or actually they will report direct to the board of directors. That means to some degree they are independent of the institution. To some degree. Because one, their decision in their daily doing of work is not so much affected by management. That, oh, if I report a deviation from an internal control, the manager will fire me.
Will fire me, yes, yeah.
There's a limitation there in that the fact that he or she is not reporting to the manager, that alone is a minimal safeguard.
Okay.
So that they remain objective. Familiarity might be there, but it is to a lesser degree.
Lesser degree.
Yeah, but now let's look at this other one who is coming from out.
Yes.
An external auditor. He's not part of your employees. He's not part of your human resource. But what is now bringing the two of you together? We are signing a contract. That means we have a contractual obligation.
Yes.
So I'm coming from an objective point of view. I'm coming from outside the institution to look at whatever happens in this institution from an objective point of view. So the external auditor is going to sign an engagement letter, which is the contract, stipulating the terms
and conditions. Yeah.
Stipulating what is their responsibility, what is their role, what are they going to play, but also what is management's role. Because at the end of the day, these two expectations have to reconcile as I work towards expressing the opinion.
Okay.
Because the cooperation between management, the support from staff, the openness and the transparency offered to me when I come to review your documents will play so much role in my comfort of appreciating that I've obtained sufficient and appropriate audit evidence.
Audit evidence.
Yes.
Wow. That's very, very interesting. Now, you talked about expectations must reconcile.
Yes.
But now this, I want to drive it back still to that internal and external auditor. We have scenarios where reports can differ. Do we have such scenarios, by the way, where an internal audit report, the opinion from an internal auditor is actually different from the opinion of an external auditor? And in case of that difference, how do you resolve that?
Okay. Now, two things have to come into perspective. There are considerations that the external auditor will consider either to depend on the report of the internal auditor or not. Two things. Is the internal auditor competent enough to execute their work?
Okay.
Is the internal auditor objective and independent to say a situation the way it is?
Okay.
But also, in the course of the independence, can another party confirm that really Enoch is independent? Or someone say, Enoch is reporting that the general manager is not reporting on duty, but every evening we see them reporting in the bar trying to catch a drink. So when people start to discredit that objectivity, then it is questionable. Now, when we assess with the external auditors, when we assess that there could be such compromise, we may not base on the report of the internal auditor.
Okay.
That means we are going to go full blast, design our procedures, and be able to arrive at an opinion that befits the situation. But two, what someone should appreciate is that in the world of the auditing, if I came and did the audit for Smart 24, if another auditor came and used the same information, we should be in the same range.
Okay. Even though
we should not differ so much. Okay. Because the presumption is we all have the same competence. Even if our procedures might not be the same, but the output should not differ so much.
Okay.
Yeah, because we are all using the same knowledge, same expertise. Okay. The approach might be the one which might differ. Oh. So at the end of the day, we should have almost or even the same report and opinion.
Oh, right. That's very interesting.
But two, one should not. I might have come and used the same information, but during the execution, part of maybe the information which was furnished to me may not be furnished to the second auditor.
Oh, so that is also that possibility.
That possibility.
Okay.
Yeah. So you find that if such circumstances happen, then we might not arrive at the same position.
Wow.
Yeah.
So, but I believe it's not. It's quite a rare occurrence.
Very rare. Very
where
rare.
Information is hidden from you, from that. And definitely, if that happens, then there is a hidden agenda regarding that.
And what we always want the clients to appreciate is that when we come to you, let's be intentional and rational. If I created a report between Enoch and Andrew, one, I will remain with my questioning mind. Is what Andrew telling me true?
True, yes.
But also, if there is no report for me to interact with you, you want to be free with me to open up.
Okay.
Yes. So you'll find that people may think, we have auditors next week, others take leave. Just imagine we started the audit and the finance manager takes leave, the CFO takes leave, even the accountant takes leave.
It's very inappropriate.
That is a red flag that there's something.
Something not right.
So you realize that if we were doing a financial statement audit, we may advise management or those charged with governance to institute a fraud investigation. Why are you taking leave when the audit wants to start?
To start.
Yeah.
So that means as the CEO or the owner of the company calls upon that auditor, because we've seen scenarios where the top people are really, when they get this information about their auditing, they are actually questioning the auditors that this can't be, you know, and he's the top, he's the overall decision maker regarding that. Anyways, now let's get back to this aspect regarding internal auditors.
Yes.
Getting to understand, can I say that the qualifications of an internal auditor will a little bit differ from the ones of an external audit?
No.
The same qualifications.
Two things that should be put into perspective. The internal auditor is not going to express an opinion. It's going to give a guidance. It's going to give a recommendation that, look, our supply chain, there's a loophole that we need to mitigate for us to lose goods as they leave the gate. As they leave the gate, okay. There's no gate exit notes, there are no delivery notes, or there's no register at the gate for the fleet. So she's going to do that analysis all here and recommend we should have a register at the gate, we should have an exit note, we should have such in place. That means there's so much on risk management in terms of effecting the internal control. Okay, wow. Yeah. Then the external auditor is going to examine whether actually these internal controls are working. That means when you hire me to come and do the audit, one, I have to examine whether actually those controls are working. So I'll do a walkthrough test. If you say you have an exit note at the gate for whatever truck is moving out, does it exactly exist? That means on the day that I've come on ground, I'll monitor the truck load. Even if I don't tell you that I'm doing so. So yes. As it exits, I also walk to the gate and see whether actually that exit note is there. Now, through that observation, I'm able to conclude whether actually the control you designed, because you are mitigating that nothing should go out undetected. So that means I'm looking at, is this control effective? The control might be there, but it is not effective. Or it is there on a post-mortem basis. Imagine the vehicle leaves, and that's when I ask, does the security person have the register, but the vehicle has left? That means I might not even be in position to recall that vehicle back. Okay. So the internal auditor is much on risk management within the institution, and they offer recommendation. Now, at what point, when I come in as an external auditor, I'm going to ask you for the internal audit report. Why? It is going to inform part of my evidence collection. To be able to either confirm whether it is sufficient or I need to dig deeper. Okay. So you realize that when I test these controls, I'm reducing on doing substantive work. What is substantive work? If you're telling me that my bank balance at that 30th of June 2022 was 30,000, I need to go back to your bank statement and look and observe and inspect the statement and confirm. But if I wanted to test the control that you do reconciliation, I will ask you for only the reconciliation statements and see whether they were prepared, reviewed, and approved.
Only that.
Yeah.
All right. Very interesting. I believe we are really learning something as business personnel. Remember, on Smart 24 TV, we drive business, and of course, whatever concept that is needed for your business to prosper, we always bring it to you straight to your sitting rooms, and of course, the decision is yours to make. Now, as we wind up, before we go for a break, when you make these audit reports, do you keep a copy for yourself? Now, I'm looking about an external auditor. Now, coming back to the question I wanted to ask you earlier, but it kind of skipped my mind.
Yes.
That some people, I'll say some companies, do hire auditors as a formality, simply because they want to show that, okay, they are compliant, to the requirements.
Yes.
But those reports probably, because I want to know if the manager of that company or the CEO gets that report, who does he submit it to?
Okay.
And now, you who has given him that report, do you keep the copy? 3, do people that are responsible stakeholders who come to find out, like tax authorities, do they come back to you as an external auditor to confirm whether what they saw it rhymes together with what the manager revealed to them?
Okay, thank you so much, Andrew.
Yeah.
2 things. Whom do we give the report to?
Perfect.
But let's first appreciate the process before we reach at the reporting stage. In executing the audit, there are 3 phases. We have the planning phase, we have the execution phase, and the completion phase.
Yes.
Now, what entails the planning phase?
Planning.
We are asking management, who are the owners of the business?
Okay.
Who are your lawyers? Who are your bankers?
Okay.
Who are the people that you're answerable to?
Okay.
But 2, within management, we have the top level management. Either CEO, CFO, general manager.
Okay.
But amidst those, there's a contact person where if we need more information or clarification, they are the contact to look for that information.
Among the people you're responsible, you're answerable to. Yes.
So during the entry meeting, which is the meeting introducing the external auditor to the other party, we identify those parties.
Okay.
Whom are we reporting to? Who are those that are going to sign the report?
Okay.
And who is answerable to implement whatever would have recommended.
Okay.
So in that we identify whom the report will be furnished to, how many copies would they want.
Okay.
And now to get to the second question, do we keep a copy for ourselves?
Yes.
Yes, we do. Why? A client may say, you furnished me with the report, well, but we misplaced it. But it's in the process of processing a loan, and the bank wants a copy,
An audit
and
report,
he can't trace it at his office. It is a practice for all auditors.
Okay.
There's what we call archival. After I've closed up a file, I archive it so that I can retrieve it anytime
you need
I
it.
want it.
Yeah.
So we keep a copy for further use.
Okay.
That means if a client lost, then they have a fallback.
Okay.
Yeah, so there's that accountability relationship. But also, as you said, if you are walked to me and asked for the report,
Yeah.
or if another person walked to me and asked for the report, am I at liberty to share?
To share that?
The answer is no.
Oh.
Because in this relationship, when we were signing the agreement, it was between me, the auditor, and you. That means any third party that wants to use this information from my end, I need to obtain a written representation from you authorizing me to
Okay,
share that information.
because actually I thought, because now if this person, this is the government,
Yes.
it's the Uganda Revenue Authority, wants to get a proof. Because I'm looking at a scenario whereby the audit report that you delivered to the other company, or to the manager, was compromised for the sake of creating a picture, but you have something different. Don't you think now in that way, that policy needs to be a bit revised to ensure that there is, if it's matters of government and collecting revenue, you may not need.
Now, 2 things that we need to appreciate here.
Yes.
Once a report is signed off, I have a copy, you have a copy.
A copy, yes.
In the instance where you for the same period we have a different copy, my copy supersedes your copy.
Okay.
Because there are unique characters within that report.
Okay.
One, that report should contain the name of the partner of the firm who signed the report.
Okay.
But also, it should have a seal of the partner who signed
the report. Okay.
Now, for you can compromise and say, okay, I'll get out that page which was signed and put other pages. But remember, I also have a copy.
The copy.
So in the case of contention, I'll avail the copy I have, which actually has your signature.
Okay.
Because when we conclude, that report has to create an ownership party. The firm, the client signs first. Actually, it is the client first sign to confirm that the information you gave to us is true. But also, you're telling us at no any point will I compromise what you have given me. But we are also keeping a copy in case one you lost, but two in case you compromise, we have a copy that was signed and accepted for stakeholder use.
Okay,
yeah,
very interesting. Well, it's exactly 58 minutes that's past the hour of 8 a.m. And of course, we are in the topical discussion, and this time around we are looking at auditing and why do we really need to embrace the concept of auditing into our businesses despite the fears that are put out there. And of course, when we return, we're going to be discussing more regarding the auditing process, and also we shall get to understand that how best can you as a small and intermediary business personnel, probably you're down in Chukubo, you're doing your business out there, but you don't know about auditing. How best can you actually acquire yourself an auditor at fairly subsidized rate? I will say that because of course it's a service and you will have to really pay for that. And of course we are going to also delve deeper into why the benefits of a business to have audited reports. That coming up after the break. Good morning.